Global markets are firm today. Crude's at $115 plus, though Brent. We've had a good rally post the budget. So where do we head from here? Anand Tandon of JRG joins in to talk about that. Morning, Anand. What do you think? Is the worst over for this market?
Well, then right now we are living in Alice in Wonderland. As you mentioned just now, the markets are at a new high globally. Well, not new high, but are doing reasonably well, as is oil. And we all know that for most world economies, high oil prices not necessarily very good. And while in the initial stages there seems to be a direct correlation between stock market prices and oil prices, as the price continues to rise, especially I would imagine beyond $100, I think the correlation has to break down, because you're going to start having some kind of a oil shock, and that will again deflate the economies fairly significantly. So this is probably, in my view, the last leg up before you start trying to figure out the realities of the higher oil prices, unless the oil prices themselves were to come back to more normal levels, which, given the current geopolitics, seems to be right now less than a 50-50 chance.
So what would you read what's been happening so far in the market, Anand, post-budget especially? A relief rally that you would sell into, or do you think this market at least has found some kind of bottom that is put in place? After this we'll see where it goes.
I think technically there has been some kind of bottom formed. I think you reached a certain level twice over and bounced from there. Clearly the budget has created a relief in the sense that a perverse relief in my view. I mean, you have a situation where you are willing to tax healthcare but not cars, and that leads the market to go up. So those are anyway strange logics, but the fact of the matter is that most of the expected sectors which were supposed to take a hit in terms of taxes have been spared, and therefore for the near term the market seems to think that that's good for the economy, and has taken the leg up. So technically, as I said, I think probably you have reached some kind of near-term bottom. But again, I think the longer-term fundamental arguments continue to remain somewhat negative. I think you will continue to find margin pressures, earning pressures, all of which we've discussed in the past. I think interest rates still have much more higher space to go. I think the headline numbers for the budget were generated by a random number generator. We have had a situation where social expenditure is down 50% on year-on-year on the budgeted figures, and I don't know how those figures come through. And I'm not even talking about the big subsidies which most of the commentators have commented about. So I think you will find that as the year goes by, at least for the first half, the market will get tighter in terms of interest rates, and therefore that cannot actually let the market up very high. So I'm still not very bullish on how far high it can go, but for the near term, the immediate danger of a collapse seems to have been averted.
Looks like the next dole out of cash may be coming by way the oil companies, though the third supplementary would be tabled today. 21,000 crores expected to be cleared for the oil companies. So Anand, you don't believe the market is calling it right in reading an end to the interest rate hike post the budget?
Well, we have a strange situation, Mithali. This is not only true to India, but you look at UK, you have 4% inflation and 0.5% interest rate. Will that be the end of interest rate hike? I would think not. Especially now, coming back to the Indian market, clearly the numbers in the budget to me are extremely suspect. You have a situation where revenues have not grown, and you have a situation where we claim to have a lower fiscal deficit, and I'm saying even if you take a nominal 15% growth in expenditure, you should have an increased deficit. Of course, as I said, we've done some Houdini act in terms of making the expenditure numbers vanish, but when it comes out to paying salary, I don't think how it's going to change it very dramatically. So I think expenditure will be higher. So this the market's fixation on saying, the borrowing is below 4 lakh crores, I think is complete hogwash. Given that scenario, how will you expect to get to borrow more unless there is a large inflow of capital? Can the inflow of capital come? Yes, I think it can, because I think again you have a situation where US is probably peaked out or is near the top, and the economy, while it's supposedly doing well, I think fundamentally remains very weak. Consequently, the move back to larger economies in terms of money flow may sometime very soon reverse. And given that commodities are also fairly strong and reasonably highly priced, there aren't that many other places except to look at emerging markets again. Now, whether India will be the beneficiary of it, I would imagine we'll get a fair share of it, because there aren't that many other emerging markets which have any kind of structure where you can put in large amounts of money. The one thing that this budget has enabled is, of course, to raise some money in terms of infrastructure, and therefore, at least in terms of bonds for infrastructure, you may find that there is a significant inflow. We've not really been able to demonstrate the ability to use that capital sensibly, but if we were to, and this is more hope than strategy, if we were to be able to absorb that money, I think we will be able to get some reasonable inflows through, and that can keep some cap on the interest rate. So it's a little bit of an iffy situation. It requires a government that acts and not one that does acting.